Okay, so in the world of trading, like Iron Condor got 18 different ways to trade. Tonight, I only sharing one way only, selling out of the money Iron Condors. Okay, okay, I'm not even thinking of selling in the money out in the money Iron Condors. Okay, in the normal market, people thinking trading whether it's bullish or bearish, so they like to trade direction up and down. Tonight sessions, we are trading multi-directional or multi-dimensional. I will explain to you more later on. Multi-directional. So these are some of the trading we can do with options. We got directional trading, we got income trading, we got earnings trades, then we got abnormal volatility, high option premium volatility, and multi-dimensional trading. Okay? Sorry, give me a minute. I saw some names inside. Let me see first. Who else inside here? New Evan Fu is Kilang. Yup. And Mr. Tan and Boone. You're a first timer here. Okay. Have you any option experience? Good. Then tonight's session, we are focusing on selling iron condors for income. Before somebody say iron condor, where can make 12% one? I show it to you. Cannot. That's why in fact I got iron condors, sell iron condors, I can make 2,000% return. Okay. If I can show you whether you want to do a 2,000% return on income iron condors, income trades or not. That is another story. But the market give you the opportunities if you really want to go that way. So before we go further, definition of trading. Trading got two types: buy, pay money to open a trade; sell, receive money to open a trade. So tonight's session is income trading, correct? So basically, we are doing selling to open a trade. Means that we sell for credit, we collect money. In my world of trading, it's not bullish, bearish, sideways. In my world of trading, it's called multi-dimensional. We got ultra, extreme up, extreme down. Like recently, you can see OXY like that. OXY lah, like Lockheed Martin, all ultra up. It's not conventional. It's not normal market. But normal market, trading up we call bullish. Trading down is bearish. Sideways market. But in world of trading, in my world of trading, is 6 dimension. Today's session, we are not basing on chart patterns to sell income. Most of the time, I like to use option premium volatility or use Greeks or use some other things. Of course, you can use support resistance line to sell. You can sell iron condors based on support resistance lines also can. But personally, I feel that if you use support resistance line or standard deviation to sell, is how to that so past 10 means that my far out the money income iron condor is now version 11. Okay. So these are star trade. We don't talk about it. So before we go further, income trading can be defined as open risk and fixed risk. Open risk basically we sell nickel call nickel puts. It's open risk because nickel call nickel puts. Why open risk? Because your put can be converted to long shares. Your short call your short nickel put your short nickel call can be converted into long into long shares. Right. Your short call can be converted into short shares. Your short put can convert to long shares. So if you sell call, sell puts, basically you are doing open risk trade. Means that what's open risk trade? Open risk trading is reflecting that you are trading with capital risk, share risk. Okay, before somebody asks me, yes, we can do the whatever method I share tonight, you can modify it, adapt it to trade options on futures. But if you want to do it, nothing wrong. Do take note that options on futures is much more interesting and challenging than options on shares and indexes. So tonight's session, most of the time we will focus on fixed fee trading. Means that basically we are trading a predefined dollar value. Can be $100, can be $500, can be $1,000, can be $2,000. determined by you before you looking for the trade. You notice looking for a trade without no leverage, no margin, no buying power effect, no stop loss order. So if I go and trade a $500 trade, worst case, the market go against the 100% I think, or the company got delisted, the worst case I lose is $500 or less. Anybody, any questions? Yep, any questions? I got some new names inside. So in the world of trading, we got three types of trading now. We got directional trading, bullish, bearish. But this one need to be right. If I go and buy a call, buy the shares, have to be right. If I go and buy a shares, 1,000 shares, I think market drop $2 against me, I go have a $2,000 loss. That's the fact of life. So you can say income trading is what is based on multi-directional trading, based on option premium analysis. That's my style, or based on Greeks, based on delta numbers, probability numbers, or standard deviation numbers. Wherever is there is something wrong. But one thing good about this income trading, do not need to be right. For you to lose money, you must be wrong. Means that if I enter an income trade and suddenly the damn thing Amazon drop 10% the next 3 days, of course you're going to lose money. But what's the probability for Amazon to drop 10% in the next 3 days? Is another matter. There's another trading, it's called price action voltage trading. It's trading using options or shares or futures or spot forex. You want to call it scalping, you can. Enter a trade, make 50% higher. If option is 50, option trading is 50 to 50, 30, 40, 50% in 4-5 hours using options. For shares and futures and spots, you can call it day trading or intra-week trading. Before we go further, definition of direction, debit, pay money. It's a one directional trade. Market must go up or must go down. It depends you bullish or bearish. You buy, go up. Short must go down. And one thing bad about this trade, you can make a lot of money. Okay, my recent trade, which I make for Upstart, in 2 days, I make $20 in share value. I make $20 per share in 2 days. But the problem, that is shares. Okay? So if you trade 1,000 shares, like me, like that, that's a $20,000 profit in 2 days. Anyway, one thing good, one thing bad is what? If you go buy a share, it's unlimited profitability. But one thing bad is must be right. Credit means that income trading means that I collect a credit. Every trade I collected, by the way, cover call is not income trade. Okay, I repeat, cover call is not income trade. Because cover call, for you to do cover call, you must buy the share. And wherever credit you collected, when you buy a cover call trade, you have to pay for the share. And the share value is definitely higher than the credit. So for general trading purpose, cover call is not an income trading method. It is a good method to use if you're holding shares for long-term investing. And one thing, income trade must be multi-directional. It means that if the market don't move, you can make money. If the market move $10 or $15 or $20, you should be against you, or in favor you are, you should be able to make money. Depends. Okay, you must able to move. So even the market go against you, drop 3%, 1%, 2% against your position, you still should able to make money. And then income trading is always based on option premium. Anybody, any question? Yep. Any questions? I see some new names inside. That any questions, please? Because you are new people, I definitely want to talk to you, because the rest of people like Ludwig Hao Ming Fu Ming Yvonne Elvin all these are my own. These are my students. So tonight's session is not selling seminar. When I say educational, it's educational, because if not, currently now my students are outnumber you all 4 times. Anybody any questions? Don't worry too much. I suggest you stay back to the end. You can you can see live market. Why my students come in? Because I love when I do such webinar, it's always followed by a live market session. How to put it nicely? Said, can you be more definitive on your question? Because option premium volatility cannot. This is a very interesting stuff. I think it's better for me to show you some examples during the live market part, because if I explain you in detail, by 12 o'clock midnight, I still have not explained. Okay, will it be better if I show you in the live during the live market session? That I suggest you to pick up a few companies you want to trade. So Seth, you must tell me, are you a directional trader? Or are you a premium seller? Because if you are an experienced premium seller, then my explanation to you will be totally different than somebody starting off. So what is income trading? Income trading is to generate income, basically passive. If you want to say shade it to make money, yes. In non-directional market, it means that you are not taking a position. Market go up, market go down, market don't move, you still can make money. One thing good about income trading, your capital risk and your time frame is predetermined by you. It's predetermined by you. Okay? It's predetermined. Means that Thomas, recently I taught some of my students how to sell a naked shredder in a money shredder on the company called Upstart. When expiry? January 2023. It's valid. It's an income trade. Income focus plus the trader want to prepare to pick out shares. Okay? You sell naked or you sell what? Drop me a message. Can you tell me how you sell income so I could address your needs better? Mr. Tan, also the same thing. If possible, I want to tailor as much as possible my explanation to your needs. You are public, you are first timer, you are second timer here. So I want to reach out to, I want to educate you. My student, don't worry, my student can pick up one because my students will like I said earlier. Okay? Now, okay, next. Before we go, I said earlier, income trading means that you don't look at chart patterns. By my definition, you don't look at chart patterns. You don't need to predict the market. Of course, if you want to use income, you want to sell nickel, call nickel puts as a form of directional trading, yes, you can. But we're talking about income. We're talking about trading the market regardless of directional. You want to trade 30 minutes away or 30 minutes a month or 30 minutes every Monday, Tuesday, Wednesday, Friday, up to you. How much you can generate fixed risk or open risk? Fixed risk can generate 2% with 95% probability of success. I say 95% referring to theoretical probability, or to 1000% return over risk. When I say return over risk, but credit divided by maximum total loss. Seth, do me a favor, can you tell me what type of selling do you sell nickel call nickel puts? Or you sell spreads? Same thing, Mr. Tan also the same, put up your thing. Okay, good. Now, look carefully here. Some of the income combo strategy, very popular. Naked call, nowadays, in the last 2-3 years, naked call, nobody want to sell. I repeat, last 2-3-4 years, naked call because market is bullish. Every time I sell naked call puts. Naked puts was most popular until November, December last year. Last 3-4 years, naked call, naked puts is one of the best, so-called the safest way or highest probability of success because the market is bullish. But what's the problem? The problem is this: the money you collected is not worth the risk. Like recently, last Saturday, I met up with one trader, which I know him, attended my webinar since 2019. He come in, want to join one of my classes now because why? His favorite method, selling nickel puts, in the month of December, lost 6 figures. 6 figures. I don't imagine how many 100,000 of US dollars he lost. Okay, 2 years, 3 years of profit cannot cover the losses. 2-3 years profit of nickel put selling, lost all back in 1 month, plus a big chunk of capital, 50% of his account size. His or her, his account size, not only one. The person concerned is the most recent one. So people lose a lot of money because naked puts is the best in what? Bullish market. But now the market can see now. So sounds like that. So naked call, cash secure is open risk, defined as share risk. Naked put, cash secure also also the share risk, capital risk. Cover call, please it's a share risk. Cover share risk. You have to buy the shares, correct? So it's considered open risk. Anything that is share value based is open risk. Shredder and strangles also open risk. Why? It's naked. Inside you're not hedged with. So any one time as naked call, naked puts or cover calls any one time the buyer of that call, whether the buyer of your of you sell a call, somebody must buy, correct? You sell a put, somebody must buy, correct? So the buyer can exercise you anytime. Don't be like last month one of my students transition from his previous guru school got assigned 500 shares of a 160 put 3 hours before expiry. Anyway, so this type of thing, so now we are doing hedge spread selling. What hedge spread? We sell one call by one call, we sell one put by one put. One thing hedge spread is good one is considered predefined fixed capital trade. If you're not too creative, follow the rules, a spread is quite safe if you follow rules. Anybody, any questions? Anybody? In the world of trading, okay, option trading, there's only 3 factors that affect your option tradability. Directionality. If I sell a bear call spread and the market drop a lot, your bear call spread will make money very fast. Let's say sell a bear call spread, out money bear call spread, and the market don't move. You can make money now. Yes, you can make money because of time decay. Option premium price, time value, time decay. That is one now. Okay. Another one another thing, of course, you sell a bear call spread, and the damn thing shoot up go up against you, you are going to lose money. So the factor that affect your option trading, whether you buy or sell, is 3. Option premium volatility, to put it in the layman term, is referring to the volatility or the volatility of the price fluctuation. Okay, this one we can discuss it more later. Let me show you a few examples. That'll be better because explain to you it can be very confusing. Show you in a live market context, it should be easier. After the market is starting at 10:30 and today we start at 9 o'clock, so I think we got a lot of time. Before we go further, ladies and gentlemen, so yeah, typical starter trader account side, micro, then micro, macro, and serious. So ladies and gentlemen, if you want to sell nickel puts, please do not do it with a macro or micro account. A naked put you sell on let's say Upstart or PayPal let's say go and sell at the money put out the out the money put at $90 that trade 90 put is equivalent to $9,000 shares equivalent. Okay, sell out the money put at 90 is nothing wrong, but that's a $9,000 trade. Ladies and gentlemen, do you think it's a good idea to put 30% or 90% or 80% or even 10-15% of your trade into one trade? Of course not. Okay, of course not. Tan, any question? Yup, any question? Sorry, I have to put it in now. That in. Ludwig, any questions? Dave is not a problem. Yup, Jane is not a problem. So tonight I'll be talking trading strategies that you can trade at macro or micro account size. I repeat, macro or micro account size. Okay. So before we go, continue show some slides of subtraction. I'll repeat again. Profitability referring to the returns, referring to the credit collected upfront. We're talking about income spread trading now. Risk is a maximum total loss. Probability is always theoretical, duration is number of days. So these are the key factors of an income trade. Anybody got any questions? Anybody any questions? Is my audio visual okay? Thank you. So here's an example. I just extracted it earlier this evening. This is an income trade, fixed risk income trade. He's selling iron condos on what? Amazon. Okay? This trade is 37 days long. You can see now every trade got what? What is the capital per trade? This is a $20 spread, so it's $2,000. So this trade, after I said, by the way, these are real life codes, be pre-market, okay? Okay, you can see so the trade, how much collected? You collect $1,587 credit. Thomas, what is the worst case? Thomas, what then notice what's the maximum loss? For $413. So return over risk, what is the return over risk? Is credit collected, okay, which your maximum profit is 1587 divided by total maximum loss is how much? $413. So your return over risk is 380%. Then we got theoretical probabilities of 60%, 60% theoretical probabilities. The duration is what? 37 days. This one is sell out of the money. In my world of trading, it's not out the money only there. At the money, out the money, far out the money, far out the money. That is my definition. Let's be honest, you say out the money, you sell $500 out of the money, consider money. You sell $20 also out of the money. You sell $5 out of the money, $5, $10 out, $10 out of the money, consider out of the money. So in my world of trading, I define it as at the money, out the money, far out the money, far out of the money. This trade theoretically possibility of winning is 60%. One good trade can cover at least three trades or 4 trades. Yeah, one good trade can cover about three bad trades. Anybody got any question regarding this Amazon? Later on during the live market part at 10:30 or 10:45 or 11 o'clock, I will show you some live examples. Is it a best trade? Is it a good trade? No comments. Because this one, to be honest with you, good trade or bad trade is 100% dependent on the individual trader's objective, skills, and competency. Tan, any questions? Seth, any questions? Yup, any questions? This job very quiet. This one is based on probabilities out of the money. Okay, the probabilities out of the money there's many ways of doing it. Later on, I will share you some ways of calculating how far out the money you sell. It can be based on chart patterns. It can be based on standard deviation multipliers. It can be based on ATR. It can be based on probability out of the money. You can base it on delta numbers. You can base on IV. You can base on a lot of things. Okay. You are looking at what? You are looking at this one, correct? What? Don't sell at 2820. Yeah, 2820. I selling 2820 call. I hedge by buying 2840. I sell a call. I sell 2620 call put. I hedge by 2. So it's a $2 spread. So you understand what I'm saying? This one tonight I'll be sharing with you. So I'll show you some examples, Mr. Tan. Then we can discuss the detail inside. So we say do normal trading. You are doing directional trading, straight call, straight puts, is it? Or you do spreads only? You sell a put, exactly the same thing. This one, when you sell a naked put, okay, you are selling. This one, you are selling a spread put. In this case, myself, I shorted put at $2,620. I buy H. Straight call, straight put. Okay, fine. This one, sometimes when you buy and lose money, ask yourself, the seller make money, correct? Okay, anyway, this is one example. Another example here is also Amazon. This one is 90% probability of success. This one is based on the Greeks formulation. Okay, this one is based on bimodium, I think. I'm not sure. I'm not sure it's based on bimodium or BNS or Black and Scholes. Later on, I'll on one of my teaching accounts. Then from there, practice. So this trade is what? This trade even sell further out of the money. Now we are selling, instead of selling 2,600 okay, instead of selling 2,600, now I'm selling 2,100 put. Then I sell 3,185 call. All I hedge. The return over risk for this 37 days trade or 30 days trade, okay, okay, 37 days trade, okay, is actually, we can do it up to, actually I'll find this method called iron condor can be done or even intra-hour. At the higher level of trading, you can do income trading, sell this type of method, and do it as intra-hour trading. Okay, of course, for public reasons, I'm not going to teach you how to do intra-hour unless you're proven to be competent, skillful trader, then we can discuss about it But at least now, selling iron condors on now today is what? Today is Tuesday. Selling intraday iron condors is feasible, achievable in the right market conditions. So it means our friend is our Mr. Tan here is a put seller. Nothing wrong. I like it put. Tan, I suggest you stand by some companies. Later on, I will show you some examples, and from there we can discuss the detail in. Short-term put selling, long-term lips, long-term bullish lips. This one, the difference between this one, besides the returns, one trade, same company, same time, and do same then. By the way, this one is theoretical example. This one is example based on pre-market information. One trade is 380% return, that got 60% chance of winning. This one, 90% chance of winning, only is only 90% return over risk compared to 380%. To me, I don't do that. Fundamental analysis in today's market is dangerous. I'll be upfront you. Like Alibaba, good company, fundamentally strong, best company, but unfortunately offended the China government squeezed the company, the shares go in tank down. Okay? Remember, fundamentals will not be political or legal. You understand, my friend? Okay? So just be careful, okay? Nothing wrong with it, okay? Now, why don't you share some companies that we discuss later on? Remember, what's the objective? We are looking to income trading. What's income trading? Income trading is to generate so-called returns, revenue on a regular basis. Whether it is 30-day cycle, 90-day cycle, or 6-month cycle, whatever, is to generate revenue on the consistent basis. It can be yearly cycles, okay? Thomas, I buy shares. Buy shares is not considered income trading. Buying shares is what I call capital gain, capital growth, capital gain. You buy a shares, you close it, you have to buy and sell. So it's got, when we do income trading, means we buy and sell. Our objective is to generate income on within a specific time frame on a regular basis. Here is one of my favorite companies now. My student is making good money for doing bullish trade for the last several days. Oxy Petroleum. This is an income trade. Okay, how many days? 31 days trade. How long? What's the return? I say what's the capital needed for this trade? It's not $2,000. This is a $100 trade. $100 capital trade. Sell to open $63. What's the maximum? Why sell to open maximum profit is 63. Maximum total loss without stop loss or cut loss is 37. Return over is 175%. Probability of success, theoretical probability is based on don't know black and shows or B and S or Bibonium is 60%, 65% theoretical probability of success. The ratio is 31 days. These are some of the ongoing things. So these are some of the trades we've done in the past. This S&P 500 index. This is a 10 days trade. $500 capital, sell to open 200. Maximum total loss for this trade is 300. Sell on the third, take profit, buy to sell for $2 to open. On the 12th, buy to close for 90 cents, make $1.10. Return over capital risk is 31%. The ratio is 10 days. Anybody, any questions? Anybody, any questions? This trade is AMC earnings. It is considered aggressive, but it's actually part of earnings volatility income trades. But I share number on the 9, on the 9. See on the 9, we opened the earnings card. We collected for $1 trade. We collect 43 cents credit. Maximum loss is 57 cents. Next day, we sell to open $43. Next day, buy to close for 5 cents or $5. This is what I call aggressive form of income trading. Okay, plant, harvest, or spot. Of course, can I lose money? Yes. How much you lose? Worst case, I lose $57. If the AMC shoot up to $1 billion or drop to zero, my risk is only 57 cents or $57 per contract base. Yeah, another one, income trading on options of or gold futures. Okay, 6-day trade, make 25% return. $5 spread, collect 150. Our initial return over risk is 150 divided by 350, so about 40. So it's about 45%. Wait for 6 days, buy to close 50 cents, make $1 net. Worst case scenario, I make how much? I make $1. So technically speaking, I make about 38% return over capital risk. Am I going too fast? Am I going too fast? Now, for Mr. Tan, you like to sell nickel puts, correct? Here is one example. Okay, this trade you collected how much? This trade is a nickel put, sell 13 August. This one is a Bitcoin trade, and you sell the Bitcoin ETF. I sell 18 put. I collected 118. Sorry, I sell a 25 put. I collect $121. My maximum worst case loss is $2,379. Thomas, how you get this number? The buying power is only $175 only. No. As a trader, we do not use buying power effect to do trading, because buying power effect is just a margin deposit. Do not be like the idiots. Wow, Thomas, wow, the stupid broker force sell my crude oil futures. Okay, the margin was only 9,000. I stand by 10,000. Excuse me, crude oil futures from $9,000 exploded to $23,000. If your account size at $23,000, the broker will force close your positions. Whether long futures, long crude oil futures, or short crude oil futures, they will force. Right. This is why we call buy power effect is like the margin, which is just a deposit, so-called calculated earmarked by the broker risk management system. This trade is pure income trade. Tonight, I will not be talking about selling puts so much unless you all requested it. But I'll just show you because selling put is one of the most popular form of income trading until No, until December. Until December. Okay? Yeah, another one, selling Tesla. Wow, choke, man. Okay? Then Tesla, this trade, how long? This trade is how much? 645 days away. Thomas, wow, bear, you okay lah? No, carefully. We are selling at 800 put leh. We collect $13,000 leh. $13,300 credit leh. But this one is what? This objective is not pure income. This one, income is one, but no problem collect shares. Return over risk is how much? 20%. Worst case, how much you lose if Tesla go to zero? 6,900, $6,695. Thomas, shut up. Buy power is 9,000. How can I lose more than that? Excuse me. Buy power is not maximum total loss. Look carefully. Be on top. Maximum loss is $66,695. So people, when you sell nickel puts, nothing wrong. Sell nickel call, also nothing wrong. Take note what is a maximum loss, not your buying power effect, please. Okay? Have you sell nickel puts before or nickel call before? Good, don't. Okay, unless you want to buy a shares. Okay, nothing wrong with selling nickel puts up if you want the shares. If you want to sell puts for income player, then there is other better ways. Okay, like you sell, like I say, like said, Thomas, I sell bull put spreads. That's better lah. Because why? Worst case, your capital exposure, maximum loss, you know how much. I sell bear call spread. I also not do it for income. But if you want to buy shares, this method is good. I got students doing it on a regular basis, okay, son? Yeah, another one, GME. Wow. Buy power effect. Wow, Thomas, the credit I collected $864. Wow. My buying power effect is only $670. I can make 100%. Excuse me. Before I don't let people tell me buying power effect is a risk. Because this number can change anytime one. The same reason why the crude oil futures the crude oil futures from $9,000 margin buy power effect margin from 9,000 to $23,000. I had to scold somebody off this morning because of this stupid thing. So return risk what 8%. How many days? 37 days. Objective is not to buy the shares. Objective is pure income. Yes, Thomas can do weeklies. Yes, you can do weeklies. But good idea. Then depends on you. What's the objective? Because ladies and gentlemen, all methods excellent. You can't blame method is lousy methods. It's only there's no such thing as a lousy car or a lousy car. It's only got lousy drivers. Anybody, any questions? So when I do income trading, I tell people it's supposed to be like farmer like that. I plant the crop today. I sell a call. I sell the income trade for next Friday night, or I sell the income trade for 25th of March. Nothing wrong. Just plant now, sell 25th of March, take profit or cut loss. Anybody got any questions? Yes, I got upcoming class. Okay, I got upcoming class for beginners. Interested, drop me a message. My philosophy is what? A mixture of theoretical and trade to learn. Okay, anybody, any questions? For those who want to have a private session with me, talking about different strategies and help, or want to have a private consultation session with me, free of cost, sponsored by my students. Okay, sponsored by my students and my traders. So WhatsApp me. Okay, any question to ask? I've ended my short presentations. Thomas, what are the best method? All methods are best method because for every method there must be a buyer, there must be a seller. For every method there must be a winner, there must be a loser. So the problem is never the method, it's you, the trader. Anybody, any questions? Oh yes, I promise you something correct. Okay, how do I determine? How do you determine? How do you, ladies and gentlemen, how you all determine? How the spreads? You see, when ladies and gentlemen, how to sell out the money? You can sell. How to determine the strikes? How determine what strike to sell and things like that? Okay, selling strikes. What's a strike? Whatever sell call or sell put, they must away. So this principle sell what strikes, correct? Okay, and what expiry we can discuss later. But let's say we sell strike first. Okay, okay. So you want to know or not? Anybody want to know what are the some of the ways or analysis way for you to how to determine your short call, short put strikes? Anybody want to know? If anybody, I will tap up here. I'll explain to you. Okay, one. Okay, it's actually what I call only one person only. Tan, you don't want to know. Who else inside here that is public members? My student will know. Yep. There's a few ways. One. Okay. You can use ATR. What is ATR? ATR referring to average trading range. Okay. Okay. Then I always use a multiplier. What's a multiplier? Questionable means that times two times the ATR of 14 days times two. I sell out the money. Then can. Thomas, I use ATR weekly candles times eight. I sell 30 days, so I times two. Can. Thomas, I sell out the money using Monday ATR number. Can. So ATR is one. Another one will be standard deviation. Also same formula, same formula. I repeat again, standard deviation and ATR very often will give different numbers. Okay, so this one is what I call chart price base. Oh yeah, my typing is bad. So it's based on charts. Then standard deviation also actually is also based on chart price base because all these things are looking at the price action and the price volatility ATR. So all these are chart pattern based. So all these are most of the time you can use it as an ATR variation. In the past, I used ATR weekly, monthly, a combination of both and do that way. So we can use a variation of it. Then another one is called option premium pricing analysis. Another popular one we use Greeks. Greeks is based on mechanical formulas. You can use what for this thing you can use what let's see first. Probability out of the money. This one TD Ameritrade and Option Express and Interactive Broker have this calculation. In fact, most of them have this calculation. But is it good or bad? We can discuss later on. Sorry, your seafood is not very good inside. Then there's another Greeks here. Wait, I need to check. But make it smaller a bit. Do not run out of space again. Okay. So another one would be Greeks, correct? Another one would be considered Greeks. They also can based on Greeks. This one also based on Greeks. But this one is not based on property on the money. In the past, I still using it. Will be based on delta numbers. Okay. Then I use option premium volatility analysis. Wait, sorry, something wrong. I need to do something with it. Hey, run out of space again. Can see it now. Then another one be option premium pricing, which I like to use a lot. Then another one is option premium volatility price. So I just share you enough. I don't think I need to share too many. This one is enough already. Standard deviation based on chart pattern. Okay, yeah, another one here. Support. Very popular. Support resistance line. I don't use support resistance line. Support resistance line or what price channel. Price channel also people use. Also, if you want to use price channel, you're also using what? You are using price channel. What channel? Example would be CC channel lah. Another one will be Bollinger Band lah. A few other things. Anything that create a band you can use it to calculations. Okay. These are some of the things available. Any question, anybody? Which one the best? The everything can make money, everything can lose money, correct? So Tan and Seth and rest of you, some of my older students, what you all take? Any questions? Please ask. So by the way, standard deviation number you can use purely by itself, and nothing. This you also must be careful. The ATR we can use it on the day candles. Okay, you can use a week. You can use it on monthlies. In the past, I will use on the quarterlies. I said quarterlies means what? The each candlestick is every 3 months. 17 for standard deviation. Well, you need to choose one actually to be fair. So which one we can discuss later? What's the objective? Because a lot of you to me all have to be fair. I have done all the before lah. Of course, when the world trading will depend on the skill level and competency level lah. That's what I'm saying lah. And what's the objective lah? If your objective is to collect pure income then certain strategy will be better lah. If your objective is to do directional trading it's other thing whatever. Objective is one thing lah. Most important, what is your? Can you see here now? Can you see the chart here? This is a thinking trader. You notice you see So yes, objective So your objective what? Look carefully. In my world of trading they got system-based trading. Tonight what I showed you is based on system. But reality of life at my tutorial practitioner inner circle level, we are looking at practitioner level class. Is that market come first, you come second, your objective come third, strategy come last. Okay, so why don't you give me an example, set and Tan also. Later on when the market start then we can look at it. Can? So which one better? Every method can make money. What's your objective? Unfortunately, so which one better? Will depend on you, lor. Okay, we can discuss later on. Different people have different parameters, objective. Remember, all these are so-called aids to help you. But end of the day, you can trade all of it. All of it are valid. Which one is more suitable? Is based on your needs. More importantly, not so much on your needs or your wants or your expectations. It's based on market. Sometimes the market change, you must change. That's why my iron condor starting off at time, I started at time, version 1, where just income iron condor, income trading back in 2010, when okay, when I started trading South Table, in the past, we used support resistance 9. We use multiple time frame support resistance 9. By support resistance 9, I'm not talking about 30 days chart patterns. I'm talking about 6 months, 1 year, 2 year chart pattern. In some cases, we ever do up to 90 days. We use 3 years chart patterns. So which one better? Oh, be careful. When I use Greeks, Greeks itself can be based on 3 different formulations. You can do a black and shows, most famous. We got another one called BS bullshit. Another one is called bimodium border. So, by the way, set and tan, which broker are you using now? Yep, which broker are you using now? IB, good. With professional, but not friendly. Tan, how about you? Okay, good. So, any questions? You want to take a break? Would you like to take a would you like to take a break? We come back around 10:40, can? Would that be good? 10:40 or 10:45? Done. Set. You know why not? Now I show you example. It's not a good idea because the pre-market movement is very volatile, and most of the time we like to do at least half an hour, 1 hour after market open. But I don't think it's a good idea for you to hold until so long. Set. Come back at 10:40, okay? Yep. Okay, ladies and gentlemen, we will take a break until 10:40. Then we look at live market. Do me a favor. Do me a favor. Tell me your companies. Then I will show you the good, the bad, ugly. Do you know this is not a preview selling seminar? Of course, I can show you my slides, what's my program and things like that. I do class only once or twice a year, or 3 times a year only. But the problem is that now I'm doing slides and optimization now because my student is asking me to formalize my teaching class. And by your favorite companies, can you give me the name? Cloud, I know lah. Cloud is a CRWD lah. I have to be trading it lah. Okay, let's take a break. We'll come back 10:40. All the methods, ladies and gentlemen, the method I teach you is for conventional normal market condition. Okay, on the 16th of March, set a crowd is having a earnings announcement. Earnings announcement is considered abnormal event. So my advice to you all, ladies and gentlemen, X number of days before earnings or X number of days after earnings, you do not trade this period of abnormal price volatility. It may be nothing, it may be crazy. The last earnings have from Facebook or C continue a market collapse. Repeat again, earnings is considered abnormal event, can and will collapse the price. If you don't believe me, please go and look at last earnings on Facebook or last earnings on SE. Okay? So you cannot do anything with it. If you buy a call, do be careful. Either you become a Superman winner or the thing drop below to drop below drop below 150, the 52 week low. How we know? We do not know. Because the earnings can be good, can be bad. We don't, as a trader, we don't care too much. Because a lot of people have this mindset, I want to predict the market. So earnings is good, I buy. I think earnings good, I buy. Earnings bad, I don't post. Nonsense. What you think is worthless. We are traders. We trade market reaction towards news. Okay? So this company, my advice to you, okay? Be very careful. Okay? Nothing wrong with it. I think what I see when you buy, be very careful. If I were you, be careful now because we got earnings coming next Wednesday, correct? Next Thursday. And next Wednesday. So you may be superstar or thing drop to 140. Understand, Tan? 9 of March is actually when this Friday night leh. I repeat 9 of March is Friday night Eh? Sorry. Something is not right. You said 9 of March How can it be 9 of March? 9 of March No, stop. There is no such thing as 9 of March expiry, okay? Don't do. Okay? If you want to do a trade now for bearish, in this case bearish, because why bearish? You can see the last 3 days bear. You may want to itchy fingers do a scalping trade for this Friday night. Go ahead. But next week, don't trade already. Wait until X number of weeks and days after the earnings then enter again. If you're doing normal conventional trading. Okay, of course you can talk. Thomas, can I trade earnings? Yes, you can trade earnings. You can trade income earnings? Yes, you can. But you cannot use normal conventional income methods to trade earnings. Which for which one, Angie? For which one you want to do? Okay. So set. Huh? Hey, my friend, why you do this? Something is you're not trading set, correct? Okay. If earnings after tomorrow, okay, this is gonna be fun. I don't think so. Okay. Wait, I check for you. Sorry. My student highlight to me is for tomorrow night. Okay, fine. No good problem. Okay. Option premium fair enough. Let's say Jerry can see the okay. Set. Can you hear me? Set. Are you here? You see the option price fluctuating lah. The option price fluctuating. The 680, the 990, the $5, the 550, all these things. All these are option pricing. Option premium is referring to option pricing now. So example now, I can tell you point blank. Okay, the buyers and sellers of the market now is predicting a moving range of less than $20 up or $20 down. That can you hear me? So you see here. So every options, for example, you notice can see from at the money call, what $9. They can go up all the way to 195. Okay, $33, $33, $33 and Okay, $35 out of the money is still $1. You can see the bid price, ask price. When I say option premium volatility, I'm referring to the individual strike price options. Every strike price is every strike price with his bid ask with his buy price ask price is telling us a story. Sorry, option premium analysis I cannot explain to you in 1 or 2 sentences, even in 5-10 minutes. Conceptually speaking, is a study. Option premium was a study of all the strike price, the bid price, ask price, comparative analysis to different expiry. Okay. For those who are my income traders, for those who are my advanced can you do a income trade? Do a earnings volatility trade? Yes, you can. Hmm. You can see the price fluctuate there. This is a 250 at the money debit iron condor breakout trade. The market price now is 260, 250, 243. This the price fluctuation. I show you the volatility of the indicative bid ask price. Okay, but okay, stop. I think okay, forget that. Okay, let's go and do a normal trading. Besides set, what else? Besides crowd, what else do we have? Set, any companies you want me to look at? Done, any companies to look at? Okay, good. Apple now is become a quiet boy already, but still can play lah. Don't be fair lah. Mhm. Now, Apple, in my world of trading, I like to check. Is it got any earnings coming out now? Earnings over somewhere in January. Fine. Okay, something is not right. Somebody counter check for me. Should be okay lah. Let's go and do a 24-day trade away. You can see here now. Tyler can see here now. Compare. Why don't you compare? Why you don't you compare just now with crowd? Crowd just now $35 out of the money still got money, correct? Now compared to Apple 11th of March can see the pricing here lah. It's only what two strike price got money. You can see lah. And the money out the money. Then the third one is no money already. 62 cents. 62 cents for 150 $59 company is nothing. So you can see here the option moneyness range for Apple or the price volatility or option premium volatility compare that to crowd. This one is not moving at all. Is that a story? Yeah, let's say we go compare crowd lah. Crowd is Apple to Apple lah. We compare to what day? We compare to this Friday night lah. To be fair, this Friday can see now. You can see the price here. Can see here now. Look carefully. $160 company. It's very similar to Apple, correct? Look carefully. You can go up by 30. You can go up by 30 over dollars go up to $30 to $192. It's still $1 plus option. You can go up to $32 and a half. You can see $1.25 leh. Here you can see the money in how many strike price got options. This is crowd, correct? But if you compare to Apple for the same expiry only got two only. The three strike price out left below $1 leh. Here also say three strike price out is $1. Let me show you what the market pricing for Apple to move more than $5 is market telling me Apple is not going to move more than $5 by this Friday night. Option premium, unlike technical analysis or ATR or standard deviation or support recent nights, technical all these are past. Option pricing remember somebody buy at the money call 160 for $2.19 $2.15 and $2.17 You can see the thing is fluctuating bidding is somebody quoting buying and selling. They are what we call providing liquid, highly liquid market. So the buy price, bid price, asking price is telling me the potential range of movement. Understand what I say? Set. So set, you are selling credit spreads, correct? Can you tell me what type of credit spread you're selling? Then from there I can go forward. And Mr. Tan, can you tell me, let's focus on income trading. Can you tell me what type of puts you are selling now and which company so I can show you alternative to your put selling can? Set, any companies want to look? Okay, tell me the companies, what's the time frame you want to do for this trade? For Apple. Planta. Set, any questions? This one telling me now, ladies and gentlemen, if said Tom, you asking me, Thomas, I want to do a bear put spread. If I want to do a bear put spread, I tell you, I will not do this company. Why? The premium over risk is not justifiable. Let's say now, for sake of learning purpose, I right click here. I sell. Let's say we sell a 250 spread. We sell a 250 bull put spread. The return over risk for this trade is not just, it's about 25%. Just over 25%. You can see 52 cents divided by maximum loss of 190, 193, 190, 198. So it's just about 27, 28%. Oh, nothing wrong with that number. But personally, I will not do it because why? For this 10-day trade, it's not sell. It's not justifiable. I will not do this trade for income. Nothing wrong with the Apple per se, but Apple option premium analysis for us to do an income iron condor trade is not justifiable. You can see here property out of the money. I sell now. You can see the word property out of the money now. That is one way, correct? Property out of the money, correct? It's about 69%. Okay. Why do I do an income trade for you? Then you see it's very worth doing now. Let's say let's go and do a $5 spread. Okay, don't try that. We do $5. I try not to do $5. I hate $5 spreads. Okay, I don't try that. I do $5 spread. I hate it, but no choice. You can see from here, if I go and do a trade, they have 71% probability of success. Okay, 71% probability of success. You can see probability out of the money here, 7% probability, correct? Then here is 70. Let's say we do 70% probability of success. Here we sell 165 call. This is a trade I don't like to do it because the spread you are selling now, the range of movement is it's too tight for the good. You see now, we just sell out the money and the money out the money both of them is telling us got 71% chance of out the money, probably a success. Here is 69%, 70% probably out the money success. What's the problem? The problem is that you collect 86 cents. Nothing wrong with 86 cents. But what's the return over risk? Okay, got glitch. Okay. Okay, I know what's already. Okay, this trade is okay Want to do this trade You can do this trade now. But this trade, is it good or trade a bad trade? My students will know. Okay, on paper, it's about 69% to 71% chance of success. You want to do it That. Angie? Yvonne? Evelyn? Wayne? Wayne no need. Jane? Vincent? Do you think Mr. P, do you want to do it The strike price you're selling? Yes or no, depends. Because personally, I feel that the credit over risk is not too bad. What's the profitability? I'll show you. Okay. is what's the credit? Collect 228. What's the maximum loss? 272. 17 days straight. Your return over risk is 84%. You on theoretical probability, you have a chance of about 70% plus minus. You can see it lah. Probably out of the money, 70%. Here probably money 70%. Is it a good trade lah? On paper, it's a good trade. My students, you go and calculate. Okay, before we go further, this is based on what model? This one is based on B&S model. We got Bibonan. The most famous one is Black and Shoes. No, that one was the C market. There is no minimum maximum profit. I got people who have no problem making 100%, 200%, 300% return. But good idea or not? For you, I don't recommend it because I do not know what is your skill set. I don't want you to recommend a number that end up the number is perfectly good, but because of your what you call your lack of knowledge or lack experience or lack exposure, you end up making the trade bad. Okay, is my audio good, loud and clear? That you understand saying that? Okay, this one is I showed you what is reasonably probably. It's based on what? Probably out of the money. This one is currently based on B&S. Sorry, I use B&S because I cannot pronounce this Swedish name. Then we got Bimonium model, we got Black Show. So we got a lot of things. We can do a lot of things like the TRT metric, you adjust the interest rate, you can adjust the expiry date, all this sort of thing. But we are traders. We don't trade probabilities. We don't trade support resistance. We trade money. Okay? Let's say now you want to do a cloud trade. The cloud trade is dangerous because you can see here, ladies and gentlemen, from the option pricing alone, we know for a fact the buyers and all the options, all the big boys, the buyers and seller options is telling me this crowd expect to have a volatile movement of at least maybe around more than 20, at least plus minus $20 up or down. Tan, can you hear me now? Let's say now. Okay. That you understand what I'm saying now? So why do I use Planta? Planta is a company now got problem. You cannot sell options. You cannot sell spread on Planta because why? Planta the option is so now the price is so now become what? It's too cheap. You cannot collect money from it. Check earnings is over. Can see why I don't like earnings? Why I tell you earnings you cannot use normal convention man like Planta like that. You can see now from $14 drop down to $11 because of earnings result. So that unfortunately, earnings good, bad, ugly, we do not know. Even earnings is good, the price can drop. Earnings bad, the price can go up. The problem is the market, the people who buy the share and sell options or buy the shares is not dependent on the earnings announcement, good news or bad news. Because why? They already factor in already. And most of the time, the most of the time people know what they want to do. And if they are smart people, unless the earnings report have exceptionally bad news or exceptionally good news that the market people do not expect, then the price will move in one direction or another. So for Planta itself, if I go do a trade, look carefully how to sell. Okay, let's say now you go sell April 31 days away Look, 90 and the money call 98 cents, and the and the 98 cents, and the money put 92 cents. So can we make money now? No. Okay, we can't sell income trades. Okay, Thomas, I want to sell puts. Can. Then you want to sell. My advice you sell what puts You sell what puts You go and sell puts and maybe you sell. Okay, you go sell January 2021 January 2023 You go sell. You go and sell a put You sell in the money put. This put also can. This put can worth selling. Let's say, gentlemen, if you want to sell income for a planta company, a $10-20 company, you must sell very far out in time because the money you collected for selling 20 January 2023, 318 days away is how much? It's $230. Worst case, if a planta drop zero, you lose $770. This trade sell put can do. Sell call, not a good idea. Well, Thomas, why sell call not a good idea? I collect more money. Yes, you collect money. Ladies and gentlemen, if I go to sell a call here, you can see here, collect. You see now, what's the losses? Infinite losses. My account is sub $10,000 account, and that's the problem. The broker do not let me sell a thing, so it become illegal. So, gentlemen, you must be sensitive, correct? Tan. Understand what I'm saying now? You want to buy shares for what? You have a correct. Then different story. Then you sell April lah. But you must sell out the money, are you prepared to call away lah? If you're prepared to call away, no problem lah. You sell at the money and just call your away lah. But what you call away now? If you don't want the shares to be called away no, look carefully. And April, you must sell what? You were going to sell 16 strike? No 11 cents only Most of the time you want to sell yourself in the money at 10 call or sell 11 call. If you sell 12 call, you collect 70 cents But the problem is this, Wayne. Are you prepared your shares to be called away? Are you prepared to give the shares out of the way now? Yes, go ahead and sell. If not, don't. Okay, what is the break even for your shares? Thomas, my break even is $11. Then no problem. Then my advice to you, you go and sell $12.50 January 2023. You sell 90% property out of the money lah. But then if you go and sell 90% property out of the money look carefully, no money to collect If you go and sell 87% property out of the money, you only collect 25 cents only So make up your mind. When you do this trade when you sell when you sell a cover call or sell a cover call based on shares you must be prepared to your shares to get called away. You're in conflict. So for the money you trade, you may as well don't do it. When you understand saying Tan, set, you understand saying Yeah. So when you do cover call, remember you are selling a call You for the dollar you collect out 50 collected let's say you go and sell 11 strikes 11 strikes you collect $1.06 Hey friend, you collect people's money people can take a share anytime and you don't want to get a share call away then you don't trade Of course, you want to sell January 2023 for $2 out of the money, but $2.23 nothing wrong. It's perfectly valid for January 2023 the probability for you or share to be earlier assignment is quite low. Because why? A friend is 300 days away. Understand Wayne? If you want to I suggest you to sell January 2023 but then the problem is this I don't know what price you buy in We'll see are you prepared to get shares and call away? I do not know what the break even because repeat again when you trade sell a cover call, what is objective? Collect income? Fine, nothing wrong. But if your objective is to so-called have capital gains or to generate the increase in share price then you should not be what? You should not be selling. You should not be selling a call. Selling a call, you are taking small money for big capital exposure. Yes, you can do that way. But the problem I don't know how far you want to sell because Planta used to be $40 company or what? Let me check first. Last time used to be, let me check what's how much used to be $30 company So let's say you're going to sell 20 call now. Let's say you buy in price at $20. Sorry, my friend. 20 call, 20 call for April, 37 days away, it's only how much? 4 cents only. Okay? But let's say now you're going to sell a 20 call for January 2023. Okay? For income. You only collect 79 cents only. So you think worth it? Thomas, I bought it at 25 call. Then ask yourself, do you think for 318 days, do you think it's worth selling a call, 35 call, at a buying price of for 45 cents credit? When you understand say now? Okay, I speak my piece already. Set, any questions? Mr. P? Evelyn? Oh, the guy left already. Mr. P left already. Probably out the money is one way. That another way I like to use in the past was what? Based on delta numbers. Okay, probably out the money is just a theoretical number based on option pricing, based on number days, based on the Greeks. Probability numbers is a subset of Greeks, theta, gamma, theta, vega. Okay, this number is not accurate at all. The problem is theoretical probability of the money is indicative of now. Tomorrow can change one. Okay, so let's say now for learning purpose, let's say we sell Apple lah. Let's say now you want to use it, you can sell, you can, whether you want to sell 90% probability out of the money. Okay, let's go and find something. Beside Apple, what other companies you have? Beside Apple, what other companies you have? Tesla, good. I like it. Fair enough. And let's say now you are going to do a 37-day trade. Ladies and gentlemen, can you do this trade? 55% chance of success. Can you do this trade? This is an income trade, but it's very aggressive. Why is so aggressive? You can see here. Let me lock the price in. This iron condor trade for 14th of April. Sorry. Wait. I must be sell, not buy now. We sell first. Besides, unlock it. You are making almost 900% return. I mean, my 900% return. You can see here. Okay. What's the profitability? It's $952. 48%. What's the maximum loss? 48. This is one form of iron condor. Thomas, can I sell 60% out of the money now? Can. You sell 60% out of the money also can. Okay, let's say now you sell 60% out of the money. We are not at the money now, and the money is very low probability. That's why you can make 900% return now. 60% probably, well, let's go and find 60% probably 60%. 60% is about $4,730. You sell 430, then you buy 42725 to H. This trade is good, very good. But is it high chance, low chance? 60% probability of chance, can. You're making almost 300% return over risk. But however, do you tell Thomas, I want to do 80, I want to do 90% chance out of the money, can? Can. We are selling what? We are selling 90% probability out of the money. $90 chance of the money, Wow, so far away. So we are selling 1,220. 1020, not 200, sorry. Yeah, 1020. Yeah, 1020. Okay, around there, 1020. H buys. H by buying 1225. $1.35. 90% chance success. Okay, stop. This is a $10 spread, so I need to change to $10. Not traded. Siao. But not traded. Okay, change it over to then 125. Okay, this trade is about 20%. 18-20% return. Look carefully. What's the return over risk? Let's go and see. But this one have 90%, 85 to 90% chance of success. So what return over risk? Very simple. 187 divided by maximum loss of 813 is 23% return. Okay lah. 95% chance of success lah. Okay, the problem is set. You must be very careful. Which one good, which one bad? Another thing also must be careful is what? Check the earnings. When the next earnings coming up? Yo. Okay. The last earnings was when? The last earning was just over already. Okay. Over. How not over? You can see earnings coming out. Also be careful. Tesla earnings when? So Tesla earnings coming out again very soon, correct? So can you sell now? Cannot. You cannot sell through the earnings announcement. You can sell, but is it worth the risk of being slapped? Of course, higher probability out of the money means higher chance expire worthless. Therefore, the lesser credit you do, lor. Of course, there's a trade-off formula, lah. Is it 70% chance or 85% chance or 60%? Oh, Thomas, can I base on delta numbers? Or Thomas, can I base on standard deviation? All these type of things can be done. Tonight, I make it easy. I use the probability of the money. Is it the best is it the best form of analysis to select strike? Mm, sometime. Okay? Sometime. So repeat again, nothing wrong. Nothing wrong with selling 60% probably out of a chance. Nothing wrong with selling 95 per 90, 85, 90% of money. Nothing wrong if we selling 55% probability out of the money. Thomas, I sell 50% probability, I can. I sell 50, okay, sell 50%, I sell 50% probability out of the money, can. We can sell 50% out of the money here. Click here can. So 55% probably out of the money, how? So we go find 55%. Is it reliable? Be careful because a lot of things is option premium. I can't explain too much because it's not fair to my students. So it's 770 put. Wow, the market moves so fast. Okay. Don't mind. Let's just 770 put. 770 put, I sell 760. Something is not right, correct? You see here now. So be careful. Why? The system give you the wrong number. So we sell what? We sell 20. You see, so be very careful. You do wrongly, we can burn. So you tell this situation better. This one is sorry, I need to do a $10 spread here for you fair. So what? Which one better? Both are equally okay. This trade can make 400% return. How you know 400% return? Simple. Look carefully. More than 400% return. Why? 872 profit $872 divided. So this one is 55% chance of winning. But this number is theoretical. Be very careful. My advice to you, talk to me, attend my class, then I can explain to you. Because I make it so simple. If you go and dumb follow this method, yes, you can make money. But is it the best method? If the market go against you, what are you going to do? Remember, you sell a naked call, a naked put. Yes, it's hedge, but in the event of the good, the bad, the ugly happen to you, what you are going to do it, when to get out, when to go in, what thing you be careful of. That's a different story. But simple speaking, you can use the probability out of it. Tan, any questions? So which one better? Is 95% probability out of the money good? Or 85%, 80% better, or is it 70% better, or is it 68% better, or 58% better, or 83% better? That is another story. You can see here now. This is one of the old indicator used back in 2013 and 14. You can see here ATR, ATR daily, ATR weekly. Can you see that? So we can use that. So you can use ATR. So ATR daily is $51. ATR based on weekly is 124. ATR monthly is based on 257. Yes, I. So Thomas, I sell out the money. That's one the old one. So I will not explain too much because this is one of my proprietary indicators which I used back so many years ago. But to be fair, I don't think it's a good idea to show to you and not write to you. Look carefully here. This one is comparative. This one is a 10-day cycle. You can use ATR simple 10 or standard deviation 10. You can see the price out. ATR 10 is $53, $54 out of the $54. The standard deviation 10 days based on market close is $35. Can you not use ATR 10? Thomas, I want to sell 30 days. I use two times. I will use two times price. I will sell out the money by two times price. One time one $55 out of the money can. Can you sell based on ATR 10 days? I will sell $55 out of the money can. So 815 plus 55 is how much? 360. Can ah? Can, nothing wrong. 65% chance of money. So that's what I mean. So you use the ATR plus on top minus or below. But is it the best? That's in today's I will not even teach people to use ATR. That be honest. It can be good in certain environment. Okay? I said earlier, it's not ATR is bad. Let's say general repeat again, just in case you don't understand. Where is it? Yeah, I can't find it again. So bad. Where is it? I lost it. Cannot be. So you're wrong. Actually, to be fair, set and done, which one to use is 100% dependent on your skill set. Okay, which one better? Depends on skill set. Okay, so all these are perfectly viable. In fact, you can sell Bollinger Band also. Tana, I suggest you to have a talk with me. Set, any ideas? Any questions? Any questions? I strongly suggest do me a favor. I said, John, you give me a call. We can talk privately off. Now it's 11:30. Okay, before we end, okay, the crowd, ladies and gentlemen, you can do earnings volatility trade on the crowd. Okay, okay, do earning trade volatility with the crowd. If you feel like it, if not so sure, do demo trading. Mr. P, any questions? Jess, evening, Dave, Alvin. So Jess, if you're adventurous, you want to do 65% probably out of the money, okay, go ahead, nothing wrong with it. After all, you one good trade can cover 2 or 3 bad trades. Nothing wrong with it. For people like you, no problem. Okay? But my advice to you depend on your emotional capital because okay. But then to be careful lah. You cannot be putting all your trades in. You cannot put all your trades with 65% or 60% probably. Every trade I collect 200% return or 300% return or 80% return. Don't do that lah. Put some trades that for learning purpose. Put some trades that there's 150 200% return no problem with that one But don't put all of it in because in the abnormal volatile movement market you end up can be all hold everything loose Mr. Set from Thailand say the higher the return is the lower the probabilities. Set, any question? Mr. P, very quiet. Any question? Why? You put this style thing for what? This is an income public education session. No, not hand holding in any question. Oxy now, is it making new high? No? Fine. Today is bearish cry. Then I suggest you wait another 2 or 3 days of bear, then you enter. Okay? What is weak company? This trade company cannot trade. First thing first, the chart pattern look great. Too late already. Secondly, most important, you forgotten one golden rule of trading. Options. Okay. Okay, options not too bad. The BR option moneyness the money call the BR spread moneyness is quite okay. See market, trade market. Tonight is bearish or bullish. Like here like that. Let's say now you're bullish or bearish. Ladies and gentlemen, you can buy a call or put. If you're bullish with, buy a call. The call will cost you $1.95. If you think that the call is too expensive, you can always buy a bull call spread. For the put side, Delta 37, but the 37 Delta not so good. But then this trade is 37 days away. So you can buy a straight call here. Can I buy a straight put here? Can up? Can. Jess? Oxy, you want to enter a bullish trade now or you wait? You see now, when after you follow me 30, 40 live market session, you still don't understand. You're asking me questions, stupid question like bullish or bearish. See market, trade market. Just said you will wait because why? If I remember today, yes, 2 days ago was bullish. Now at this moment in time, wait again a minute. Let me go and see the pattern here. Okay, it's rotating. Okay, see lah. So this is a 5-day pattern, correct? Is it bullish today? Yes, it's bullish today. Thomas, if I were you, can enter bullish trade lah. Check first. 5-day high, correct? Almost 5-day high. Okay, it's bull. We agree on, correct? Then we look at 20 days, 1 hour chart pattern is what? Bullish or bearish? Is almost there, but we must be careful. Why? Oxy is testing the 52 high. So what can I do? What can I wait? I suggest you to wait, lor. Unless you want to do a $1 spread. So Jess, your decision to wait, is it logical? Yes, unless you're scalping. Of course, you scalping, then different story. Thomas, I enter a bullish trade for this Friday night. That is different story. But if you want to do intra-month or so I call tactical swing trading, yes, why don't you wait until it breach 59 and above? So your decision, Jess, your decision to enter a bullish to wait is perfectly logical. Okay, so if you want to do a scalping trade for this Friday night, $1 spread, go ahead. But if you want to do a swing trade, then different story. Thomas, I buy a straight call. Then please wait, because you know the problem now. The current price of $58.30, the all-time high is $58.77. So it's 40 cents more. Hell, you must well wait for the market breach the 5-day high or the all-time high to reach like 59 and above. Then you enter a bullish trade. When you understand say now? On what basis you enter a bearish trade? I have no idea. Correct. Logic correct. It's still bullish. 5-day high. Correct. But wait. Then the 10-day high happens to be a 52 multi-year high. So I have to wait, lor. But you enter now at 58.40 or 58.50. Hey friend, the resistance now is 58.77 there. I just telling you, it depends how bullish are you. Look at it. If I go and look at this in terms of multi-year cycle, do you think it will go up, make new high? Can. You know Putin is going to use biotoxic warfare on the Ukraine. Contaminate all the wheat fields of Ukraine. Then can. If not, I don't think there's the potential to move and make a new high for wheat. Okay? One thing good be careful, ladies and gentlemen. If we are good or bad is you can buy the shares, but for obvious reason we do options. Because this one can collapse. So we buy a spread. Thomas, can I do two or not? Yes, you can do two, not a problem. Okay? Understand that? Because the thing shoot up too high, my friend. Anyway, I don't care, it's up to your discretion. Remember, for in fact, I can do trade both sides. Means the problem with trading both sides, you have to cost you almost $4. When you think this trade worth $4? Ladies and gentlemen, Wayne is going to go and buy a shredder. It will cost him $4.30. Ladies and gentlemen, do you think it's worth to do a shredder trade on a $11.54 company that you pay $4 for it? Anybody want to buy a shredder? Do you think buying a shredder is a good idea? Shredder is nothing wrong with the shredder. What is wrong is the price you pay for the shredder. Buy iron condor, 95 cents, $1 spread. So you're telling me how to play trade? Okay, anyway, Mr. Set, any questions? You are the guest here. So I think you should have the last question. Mr. Set, I suggest we have a private call. This is my private mobile number. Call me if you want to do a discussion with me. Free. I do free 1-to-1 private session. One time only free. It's paid by my students here. People like NG Wayne and Jess all these are my Yvonne all these are my students. So if you want, this is really educational class. This is what I call C market, trade market. By learning exposure itself, you need to go that way. Okay? And ladies and gentlemen, if you're looking for notes to follow, sorry, let's be honest, the problem, the notes may be valid. The mark unfortunately may be valid at the moment of writing. It may not be valid at the moment of trading. Wayne, you understand you're talking about? Especially if you are doing aggressive C market, trade market trading. C market, trade market trading. Wayne, you understand that? That's why I ask me got notes or not. Very, very difficult to do things. Any questions? Anybody? So drop me a message if you want to see. By the way, you just joined my TRT traders group, is it? That join. You on Facebook, right? You go and check TRT traders. Then we can or you WhatsApp me also can. Okay, if not, ladies and gentlemen, now is 11:37. Hello, notes is dead. Okay, for income trading, I can give you notes because income trading is 100% rule based. For scalping, day trading, sorry, it's very difficult. Thanks, Michael. Set aside, here's the link. By the way, for those who have not joined the TRT Traders Group, please join soon. Very soon, I will be taking the TRT Traders Group private. Anyway, Wayne, you write the notes, I correct it for you, can If you want to, you write the notes, I will take the time to correct. Okay? Okay, Wayne, okay lah? Okay, let's end it tonight. Now 11 thing. This Thursday, I'm having a webinar on how to trade Bitcoin without buying actual Bitcoin. So if you're interested, look at it. We will come in again. If there's no question, I have to end it tonight. It's already 11:40 already. Tomorrow gonna be another long day. So let's end everything up.